Look at what happened next. After sweeping the liquidity above the resistance level, the market resumed its downtrend and continued moving lower. Now let's move on to another important ICT concept, the break of structure, or BOS. A break of structure occurs when the market creates a new swing that is in the direction of the current trend. For example, in an uptrend, the market is making a series of higher highs and higher lows. As long as the market keeps creating new higher highs, the uptrend remains intact. Every time price breaks above a previous swing high and creates a new higher high, we have a bullish break of structure. On the other hand, in a downtrend, the market creates lower lows and lower highs. Every time price breaks below a previous swing low and creates a new lower low, we have a bearish break of structure. Simply put, a break of structure tells us that the current trend is still healthy and likely to continue. A change of character is the first sign that the current trend may be coming to an end. For example, if the market is in an uptrend, it keeps making higher highs and higher lows. But eventually, something changes. Instead of making another higher low, the market breaks below the previous swing low for the first time. This is called a bearish change of character. It tells us that sellers are starting to gain control and that the market may be preparing for a reversal. Likewise, during a downtrend, the market keeps making lower lows and lower highs. If price suddenly breaks above a previous swing high for the first time, we have a bullish change of character. This indicates that buyers may be taking control of the market. Look at this chart example. As you can see, the market is trending higher. First, we have this bullish break of structure, then another bullish break of structure, and finally a third bullish break of structure. At this point, the market is clearly in an uptrend. However, something changes here. For the first time, price breaks below a previous swing low, forming a bearish change of character. Now, this does not automatically mean that the trend has reversed. The market could simply be taking liquidity before continuing higher. To confirm that the market has truly shifted from an uptrend to a downtrend, we need to see another bearish break of structure. In other words, we need price to break below this swing low and create a new lower low. Look at what happened next. The market broke below the low, giving us a bearish break of structure and confirming the change of character. At this point, we have confirmation that the market is likely transitioning from an uptrend to a downtrend. Now let's talk about one of the most important concepts in ICT trading, the fair value gap, or FVG. A fair value gap forms when the market moves aggressively in one direction. Sometimes, price moves so quickly that it doesn't spend enough time trading at every price level. Instead of moving in a balanced way,